Welcome to the HC Commodities Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. This podcast is produced by HC Group, a global search firm dedicated to the commodities sector. Today we're talking soybean, oilseeds and renewable fuels. Where has the market been in 2024? What is the outlook for 2025? And how could policies around the world impact or accelerate that? Returning to the show is Walter Cronin. Walter is the co-founder and president of White River Nutrition, a soy processing company dedicated to better nutritional outcomes via superior vegetable protein meal. Walter's an investor and board member across the ag and renewable fuels sector. I also want to note that I've been invited to be a panelist at the upcoming Argus Global Crude Summit in the Americas. That's in Houston on the 5th to the 7th of February. We'll be discussing the shifting landscape of crude oil trading, the growth of AI, the rise of options and new entrants from hedge funds, all topics that we've covered here on this podcast. I'll put links in the show notes if you wish to register, and I'd love to see you there. As always, you can really support the show by leaving us a positive review on the platform you're listening on, and I hope you enjoyed the episode. Walter, welcome back to the show.
Thanks very much, Paul, for having me.
So I'll refer back to the fact that we've done a couple of episodes together back in 2021 and then January 2022, really unpacking and understanding biofuels in general, but also particularly renewable diesel. So those listeners who are interested to dig further into the renewable fuels side, I'd recommend listening to those. But today we're talking oilseeds, in particular soybeans, the market, where's that market headed? We're talking renewable fuels, and then of course all of the policy regulations around that, where they're heading, especially with the new US administration, and more globally what the outlook is for both soybean and renewable fuel in 2025. So let's start, I guess, upstream and with soybeans and oilseeds more in general. How was the market for 2024 from a US perspective, from a Brazil perspective, and from a global perspective?
We always have to, when we talk about soybeans, we always have to be prepared to talk about records. And it's records both on the demand side and on the production side. We in the soy processing industry have a new customer base every single day. And that's the expansion in global population. So we're naturally a growth business. And there's no replacement for soybeans that has any sense of permanency in the future. So we have a permanent and growing demand base and no replacement on the horizon. So when we look at the past year that we had excellent production globally with a recovery in Argentina, which we talked about in prior pods. And Argentina has been a question mark. Their ability to continue to provide production to the world was certainly in doubt as much as 4 years ago, and then a devastating drought 3 years ago, and now some recovery with some potential. But all the major origins had excellent production years, but the demand side continues to keep up with the production. So a hot topic of interest in 2024 was very much focused on the United States and our expansion in crush capacity. And so many analysts, so many Wall Street analysts, especially the ones who cover Archer Daniels Midland and Bunge Limited, companies like Darling as well, presented to management question after question about, aren't we going to move into a period of surplus production of protein meals led by the United States expansion in crush capacity? And it just hasn't materialized. And the mountain of soybean meal, which is a term that many have used and they presented to the management teams on earnings calls, has not manifested itself, and it's not going to. There's no history of that in the United States. Soy processors globally will slow production and carry inventory as soybeans, which is easier to carry than soybean meal. And the surprise and I think one that analysts really need to get their arms around is, yes, expansion in production in soy production and in soy processing, but the demand side continues to keep up with the total available supply.
So can we unpack that demand side? So if I look at 2024, prices did drop in the US. Part of that is Brazil's increased production and obviously the global sort of dislocation emerging between the US and China buying more of Brazilian soy. Can you just talk about that? So let's focus on the demand side. Where is that? And obviously the meal bit that's going into food for humans and animals, and then obviously the oil side of things, which is going into renewable fuels and elsewhere, obviously cooking and so forth. Can you just help us understand that demand piece and how it's been affected by US-China relationships?
Yeah, the alliance between Brazil and China absolutely expanded during 2024 and is forecasted for 2025 as well, with Brazil providing more supply to the Chinese than any other origin. So in the soybean world, we talk about the three major origins, which are Brazil, the largest producer in the world, and then the United States and Argentina. And Brazil has got the growth story relative to the other two origins. And that primarily comes from expansion in land, not in yield. And that's true for the United States as well, and for Argentina. Brazilian land expansion is the source of growth in total production that allows the Chinese to consume more and more every year. And that alliance is growing. And as you point out, Paul, that is coming at the expense to the United States. Our soybean exports peaked about 4 years ago. And in large part, that's due to greater and greater demand from the Chinese for Brazilian production. This summer was very interesting. As late as August, this summer of 2024, the U.S. really had no forward sales on to China. So China had entered into a mini boycott of U.S. soybeans. And that was very concerning to the industry. As you said, prices continued to trend lower as the U.S. was producing a very good growing season. And all of a sudden, the Chinese appear September forward and are buying at a near record pace. So it was a bit of a signal, I think, as the election was pending, a bit of a signal from the Chinese to the U.S. agricultural community that we don't need your soybeans. We can import them from Brazil. And so that is an expanding relationship. And I'll touch on one, which is a current discussion point in the marketplace for traders, and that is what will be the total Chinese imports this year. And the Chinese government is projecting about 14 million metric tons less total consumption than the USDA is, for instance. And the question mark is, given the Chinese economy, given the decline in the yuan, is there really a belt tightening that's going to come from the Chinese? And it would be at this point at the expense of the Brazilians, not so much the U.S. as our export period is winding down here, and we hand off the global trade to the Brazilians as their new crop becomes available here in late January and then really ramps up in February and March.
Is there any sense, because obviously a topic we've covered on the podcast before, is there any sense that also actually we might be hitting peak demand in China as, perhaps that rate of entering the middle class slows? You've obviously got a rough economy, but most importantly, I guess from a macro view is population starting to stall and even starting to decline in the next decade or so. Where does that factor into that expected decrease the Chinese government is heralding?
It's a common question, Paul. It's discussed regularly. The total volume of meat consumption, eggs, and other proteins by the Chinese continues to certainly lags the United States and Europe significantly. So the question is, yes, population and the population changes that are occurring in China with less growth and now population decline, will those be offset by higher consumption of proteins moving forward. And to date, there's not enough data, I would argue, to say that there is a trend change that's occurring. We're going to be lower, at least the USDA is forecasting lower numbers for Chinese imports, down about 3% versus a year ago. But the general trend, if you take the 5-year or the 10-year, is to expanding imports of soybeans for the production of meat proteins, which, as I said, the Chinese are not consuming at a U.S. European level, and so as the country evolves over time, is protein consumption going to increase to offset the decline in total population? That's the question I would say that's before the industry right now.
And then coming back to the adding significant capacity in crush, what's driving that? Is that all sort of predicated ultimately on the rise of renewable diesel and the meal being kind of the side product, if you'd like? Or can you just give us some sense? Is this investment that was planned in the wake of COVID and ESG policies that's now delivering more crush capability, capacity, or what's going on?
Yeah, it's a good question. I think it was the second pod that we discussed the global situation, which was the demise of Argentina, which for all intents and purposes, Argentina is one of the major 3 origins in the world, peaked a decade ago. And that peak allowed for, and at that point, Argentina was 50% of global trade in soybean meal and soybean oil. And that peak was extremely meaningful for the global consumer. And it really was the United States first, and then Brazil that went into its own growth mode to offset the peak in Argentina, which Argentina still hasn't recovered from. A lot of policy changes were occurring in the United States at the same time on renewable diesel, and we're going to talk about that. But the driver at that point, back when a lot of capital formation was occurring for the purposes of building new crush capacity in the United States, was looking at prospectuses and sales pitches that were showing tremendous margin without renewable diesel. And here I'm talking about 16 through basically 2016 through 21, when the U.S., especially 18, 19, and again in 20, had sequential record margins in soy processing, driven by both domestic expansion in protein demand and global due to the Argentine situation. The capital formation occurred. It was done by the majors were expanding, to be sure, but new entrants entered into the space to build soy processing capacity in the U.S., and their capital raise and their capital focus was, in my opinion, around the potential for renewable diesel and demand from the renewable diesel industry. And the reality is that is extremely muddled right now, and the future, even after a Friday press release by the Treasury Department filling in a few pieces of the puzzle about what is the future for the Inflation Reduction Act. It still is muddled policy at this point, and we as an industry are waiting for final guidance from the Biden administration before they take their leave, and then really clarity from the Trump administration, which I would argue we as an industry still don't have, even though he's named candidates to the USDA and the EPA. We don't have clarity on the Trump perspective on biofuels at this point.
Yeah, and we're going to move on to biofuels and particularly what the outlook is there. I guess one more question, staying on soybean in particular, but oil seeds in general. I mean, what, if anything, was surprising last year? You mentioned obviously the China halting buying, but then coming back with a vengeance once the election was sewn up. What, if anything, was surprising last year, and what do you think could be a surprise in 2025? I mean, there's so many different factors here. There's, whether that's climate or weather, et cetera, et cetera. Is there anything sort of that people are looking at right now and big questions that need to be answered?
So here we are on Monday, the 13th of January, and the USDA issued on Friday, the 10th of January, its major summary report of the 2024 production for the U.S. and then its forecast for 2025 for South America, Brazil, Argentina. And the USDA absolutely shocked the market on Friday with a sequential decline from the October to November, a decline in total yield in the U.S. And then from November to January, we really don't have a December report. So the cycle is October, November, and then January final crop report for the prior growing season. And nothing in history. There's no example in history for that level of decline in total production that the USDA gave to the market on Friday. And that oftentimes that reorients the market because, as I said, growth in total production globally is really not coming from yield. It's really one single source. It's Brazilian land expansion. So when yield in what was, as I characterize, a good growing season, it finished challenging in the last 5 weeks of the growing season, which is an extremely important time period in the reproductive cycle for soybeans, the flowering period in August and September, that featured a lot of dry and above average temperatures. But it wasn't in the crop rankings, which the USDA publishes each week. It wasn't adverse enough that it was sending any signals that this may be a challenge to the total production of the crop. And yet the USDA on Friday published this record change from October to January, downward revision in yield. And as I said, because growth comes from acreage expansion in Brazil, yield is really something that can begin to sort of nag at the market. The USDA, the prior peak yield for the USDA was in 2016, and the prior peak in Argentina was 2018, and the current peak for Brazil is 2022 in yield. So the market has to sit for a number of years until we see higher yields. And when we go through periods of time without new highs in yields, it gets underneath the skin of the market, and concerns about total production can creep into the psychoses of the market very, very quickly. And I would argue that Friday's signal from the USDA was one that we'll probably look back on months from now in a price level for soybeans that's probably 20% higher, and say that was very disturbing to the market. And then the other element of Friday's report is that the private forecasters have total Brazilian production for the crop that's just starting to be harvested now in January, about 4 to 5 million metric tons higher than the USDA. And the other surprising thing was that the USDA was very slow to expand Brazilian forecasts in what I would argue has been a growing season that started out very dry, but has been since December has been nearly perfect for crop production since then.
Is there any sense, unpacking that USDA report and kind of market sentiment there, and the last peak yield being 8 years ago, that actually we are in a more volatile time as with respect to weather, increasing severity and increasing frequency of different types of events, that actually we're not in such a benign period as we have historically been, and that weather and the yield part is going to be much more closely watched, much more significant when it comes to pricing, as opposed to sort of historically where it was just really sort of looking at acreage?
There is a lack of premium in the market for adverse weather, in my opinion. And I think that the market will play catch up on that in this winter and through the spring as we determine the acreage in the U.S. One challenge that we have right now is the southern part of Brazil and Argentina, which had been very dry coming into their spring, received timely moisture and is reverted to a dry pattern right now. So the story for South America is still to be told. The USDA made no changes there. But global, overall, the lack of premium, the concern, I think it gets back to something larger that we discussed 2 years ago at a conference I attend every year in early January in Kansas City. And we discussed it again last week during the conference. And that is just the crazy ability of the Ukrainian farmer and the Ukrainian exporter to continue to supply the global markets, even in the midst of a war. And it really is a change in perspective. When the war first started, markets built in a tremendous amount of premium, of great concern in the vegetable oil markets for the sunseed, sunflower oil that comes from the Black Sea, plus wheat. And it was unfounded because the Ukrainians and to a certain extent the Russians were able to continue to supply the world in the midst of a very challenging conflict that included Russians targeting export infrastructure. And so with that in mind, and with the ability of a primary origin for wheat and for sunflower meal and sunflower oil to still provide the world, I think it put a wet blanket on the premium fire, and the wet blanket still sits there.
The energy and resources sector is experiencing unprecedented change. To help companies navigate this world and capture its opportunities, HC Group launched Enco Insights in 2023. Enco has rapidly become the leading global expert network dedicated to energy and resources. Enco Insights leverages HC Group's 20 years of connections and dedication to the sector to give clients the expertise they need to take decisions fast. Connect with Enco's experts for anything from a 1-hour insights call to a longer-term consulting project at encoinsights.com.
If we move forwards onto biofuels, if I set the scene, I guess, 22, 23, high expectations, lots of investment going in from particularly energy companies, refiners and so forth, renewable diesel and SAF seen as crucial to the energy transition, hard to abate areas such as aviation and so forth. Where are we at in kind of I guess we'll park ethanol for the moment, given what we're talking about, but where are we at in sort of renewable diesel and biofuels more generally in 2024?
Two black swan events really occurred between 2023 and 24. And I'll get into the detail on that. But as the biofuel policy was unfolding and the Inflation Reduction Act had passed, the Biden administration had set ambitious goals for the production of sustainable aviation fuel in the United States, and renewable diesel production was increasing at an extremely record rate, a relatively new fuel, so easy to make records, but sequentially 2020, 21, 22, 23, total expansion in capacity was, I think, breathtaking for us on the soy processing side, because we understood that was demand for our soybean oil. And markets went to incredible premiums. Soybean oil in the physical markets traded at $1 a pound, an incredible, almost 2 times the price of palm oil. And it was an extreme event that I certainly had never witnessed in my career, nor had anyone in my early 60s age group of people who've been around in the markets for 30 plus years. The change that occurred, that the response from the renewable diesel industry was incredibly rapid. And the response to those premiums was to begin to import feedstocks from around the world, and primarily used cooking oil, which has a carbon intensity scoring much more favorable than soybean oil. And we entered into a period of record imports that has occurred through the latest statistics from the government are through November. November was a record import month, and it absolutely, I think, caught our industry, the U.S. soy processing industry, completely flat-footed, and we just didn't see that coming. And prices for soybean oil in the U.S. a year ago at this time began a dramatic decline, to the extent in the physical markets that the physical markets really seized up, because there was literally no place left to store soybean oil. And in my career, I've never been in that situation. For one of our plants in southern Indiana, we literally could not find a buyer for soybean oil. So highly, highly unusual event. And trade flows changed. So a dramatic policy change in the major vegetable oil origin in the world, Indonesia, which decided to blend to even higher levels of palm oil into their biodiesel, and some shortfalls in total production. And with the decline in prices in the U.S. soybean oil markets during this time frame, and here it's the middle of 2024, the U.S. reverted to what it normally does, which is a global exporter of soybean oil, and it hadn't been for 2 years because of the price premiums. The shocking element, and it began to accelerate in September of this year, was the price premium that palm oil began to achieve relative to soy. And that's a second black swan event. First, a soybean oil premium to palm, which is the largest source of vegetable oil in the world, followed about 9 months later by a price premium of palm to soy that had never been achieved and remains in place today, sustained at about $125 a ton higher in price. And that has been just topsy-turvy markets moving in volatility that is an extreme 1 year change. And as we sit here today in early January, palm oil sits at a premium to soy, and it doesn't appear to be in any mode of mean reverting at all. And so we're starting in the U.S. to do an incredible amount of business with the largest importer in the world, India. And Indonesia continues to blend to higher rates on their biodiesel. And we have a complete change in the marketplace now with demand for export filling in where the renewable diesel industry was before.
And just to understand one element of that, which is, so IRA comes in, massive uptake in demand for renewable diesel. Why did that drop off?
It was the feedstock that changed, the selected feedstock. The renewable diesel industry began to shun soybean oil at higher prices and really comb the world for used cooking oil.
Didn't I see recently, or at least at the back end of 24, legislation in front of the House or proposals around banning used cooking oil from around the world? And where are we at with that? And what would that then again do to soybean oil?
Right. And that's very topical, because on Friday, the soybean oil industry and the canola oil industry in the United States has been waiting for guidance from the Treasury Department on what is going to be the standing of used cooking oil. Because quite frankly, even the Treasury Department in their announcement on Friday referenced fraud that has been occurring with virgin palm oil originating from both Malaysia and Indonesia being blended with a small amount of used cooking oil, and then the entire cargo ships and comes into customs in the United States as used cooking oil. In July of this year, 6 senators from the United States sent a scathing letter to the EPA and to the USDA saying this is fraud occurring at the expense of the U.S. soy farmer, the U.S. corn farmer, and the U.S. canola grower, and has to end. There have been investigations in Europe that discovered the fraud. The trade flows were redirected to the United States. And finally, the Treasury Department, in their announcement on Friday about the status of 45Z, the tax credit for renewable diesel, admitted that fraud had been occurring and that they were going to develop a process to address the commingling of virgin palm oil with used cooking oil. What that process is going to be, they didn't provide detail, which was extremely dissatisfying to market participants. But we wait to find out exactly how the Treasury Department and the IRS and Customs are going to address this incredible armada. I mean, the amount of used cooking oil that moved into this country was just astounding, absolutely astounding.
Yeah, and hugely, I mean, at the expense of the U.S. farmer, but also at the expense of the environment.
And the U.S. soy process.
Yeah, and the process, but at the expense of the environment, right? I mean, it's completely antithetical to the entire goal if you're growing more palm oil at the expense of virgin rainforests to then badge it as used cooking oil. But
and it is amazing to me, Paul, just the extent to which all the all the elements of this were known to the regulators and they wouldn't intervene. Extremely frustrating for the industry.
Yeah. It's part of the challenge, though, on the renewable fuels side, which is so much of it is of the market is predicated on policy. Those policies can be quite volatile. Those policies can be inexact and imperfect. And certainly when they start talking about, crossing borders, that, to really be a trader in those fuels, you've got to be part markets, part have an excellent governmental relations team and political insight around the world, right? I mean, it's definitely trading on hard mode.
And it's frustrating as well from the policymakers. So here you have Chinese, even if it's guaranteed use cooking oil, transiting from any place China could be in the furthest reaches in China. It transits across the country, across China, gets put on a vessel, now transits to the United States, and gets a lower carbon scoring than soybean oil produced almost right next door to where a renewable diesel facility is. I mean, it just doesn't make sense. It really doesn't make sense. And I do think for the carbon intensity models that have been developed, there is a sense of taking a second look at how conclusions were made about carbon scoring. And as you said, especially when you start crossing borders, I think hard questions have to be asked about the sustainability and the origin. What all went into the production of that feedstock for renewable diesel. And those questions to date have not been asked. And so things like armadas of used cooking oil from China arriving at the expense of U.S. produced soybean oil is the result. And it can't be defended. It can't be defended that anyone on the renewable diesel side really knows the origin of where in China did that come from and what were all the processes in production that lend itself to the carbon score that it received.
Okay, well, that brings us nicely to the role of legislators, and in particular the Trump administration, appreciating that you mentioned earlier, we haven't had much clarity there yet. But what is the direction of travel that at least the market is expecting? What could be surprises? How are renewable fuels in particular going to fare over the next 4 years?
It's a question, and most of the answers fall under two categories. Number one, the answer is, look, the Trump administration is going to be very supportive of biofuels because they're important to the agricultural community and so many of the states that were supportive for Trump and his presidential run are agricultural states that would be very negatively impacted if there were an end to the biofuel initiatives. So that's a perspective I think that has got the most amount of merit. The second perspective, and this one is, I think, one that is dawning on the industry, is just the incredible role that biofuels play in national security. And here we're talking about food security. So it's a question of the greatest source of demand for crops in the last decade has been for the purposes of producing biofuels. For corn, where 40% of total production in the United States gets consumed by the ethanol industry, and less meaningful for the soy processing industry, but about 9% of what we produce. So a soybean is 18% of a soybean is its oil, and about half of that goes into biofuel. So less important to soy processing than it is for ethanol production. But the question is, the demand growth has been reliant upon biofuels, and that is critical to crop production in the United States. In effect, biofuels serve as an insurance policy to make sure that crop production continues to excel, that yields and investments in genetics and farmland, et cetera, continue to ensure that we always have significant amount of food in reserve. And that reserve is really in the biofuel space, because the reality is biofuels can be replaced with petroleum fuels, and it can occur instantly. And so we always have a reserve in the United States of food crops if we turn off biofuels. And that is a source of national security. And so the question is, if you pull that support and if you allow biofuels and biofuel initiatives to decline, the entire infrastructure around food production in the United States will decline very rapidly with it.
It comes back to and we've sort of heard this on the podcast a couple of times, right? It comes down to framing. And solar panels and windmills in U.S. military bases was, cast as green, and under the Republicans was cast as energy security. But not to diminish the point you're making, it's obviously a crucial and fundamental one, especially as we go into a period of more volatile and disruptive global trade and increasing potential of weather events and so forth. Just staying on that Trump administration, there is also RFK Jr., and I say that advisedly, who seems to have some ideas that seem quite wacky, but others are very much aligned to many people's thoughts around ultra processed food and health and so forth. Is there any role that he might play in this, and how it affects the quality and the nutrition aspects of what we're talking about?
I would say that the industry waits to hear from RFK Jr. about his perspective on seed oils, which he has targeted in the past as being a source of malnutrition in the United States. And the problem with his perspective is that intrinsically, these are oils that have been used in human history for a very long time and across the entire globe. And so the track record and the history is only recently been one where there's a perspective that, look, this is leading to malnutrition. That remains to be seen how he frames the issue, how he comes to our industry to discuss it. There really is no viable replacement for soybean oil globally. There certainly is palm, but palm is challenged at this point on available supply. So the real growth engine, if the Indonesians are going to continue to increase blends and in their own domestic fuels and withdraw from global exports, it necessarily is going to be soy that has to fill the role. And this cannot, whatever the changes that will come from a legislation perspective or from demands from the Trump administration via RFK to demand more disclosures from the seed oils industry, we don't know what it is today. We really almost don't have an inkling for what it's going to be. And here the Trump administration begins in a few short days. So that is a major question mark for us. But again, I would point to the track record and the global usage of seed oils. And we really here in the United States with our struggles with obesity and diabetes and other metabolic diseases, we're different than other consumers in the world of the vegetable oil. And so is it the vegetable oil itself? Is it processed? Is it other elements? That all remains to be clarified.
Yeah, and certainly could cause more opportunity for potential rifts within the administration on kind of opposing policies around this. As you mentioned, the security implications as well as obviously the need to support farmers in the Midwest. One final other piece I want to put in just before we let you go. Just global meat demand. You touched on it with respect to China and that big question whether that demand for meat is going to outweigh a declining population, at least in the next 10 years, 20 years. Where are we at globally on that?
Yeah, and that's part of the answer to RFK as well about seed oil production in the United States. And just I said it earlier, but just as a reminder again, 74% of what we do when we process a bushel of soybeans in the United States is produce a vegetable protein meal, soybean meal. That is the protein component of an animal's diet. And that growing broilers, for the purposes of most of your listeners will be consuming boneless, skinless chicken breasts. That's the largest component of our demand in the United States. And that is impossible to produce without soybean meal. So that's 74% of what we're doing. We're producing the foundation protein for farmers growing broilers, layers, which are producing eggs, swine for pork production, and to a lesser extent for beef cattle and for dairy cattle, a lesser extent of their ration. But that perspective on what the soy processing industry does is extremely important because of this evolution coming from the scientific community, coming from the medical community, about the incredibly important role of protein consumption and denser proteins, better proteins as a source of human health and human longevity is changing extremely rapidly, especially here in the United States. And so the understanding that the quote unquote seed oil production that RFK discusses or has discussed in the past is a small percentage part of what's being done to produce a vegetable protein that can be used for human consumption in the form of soy powders, which are very popular, and or the soybean meal, which is used for the production of lean meats.
Yeah, and that probably segues quite nicely. It'd be great to get an update on what you're doing, and obviously co-founder of White River Nutrition. Can you just put the thesis there, because that is on the nutrition piece rather than necessarily the biofuels thesis?
Right. We raised capital from our investors on two major themes. Number one, global population growth, that there are going to be more people in the world tomorrow than there are today. And then secondarily, that those current members of the planet and the ones that will be joining us will consume more protein, because as global GDP expands, the first thing that people do is consume more protein. And that's simply, as I've said to you before, that's simply 2 chickens a week instead of 1. And that's going on around the world right now. So the demand for vegetable protein meals for the purposes of the production of meat proteins is the way we think about our company. We focus on better nutritional outcomes through superior soybean genetics. We have a great client base right now of global consumers who agree with our story, promote our story. And yes, we are definitely impacted by biofuels policy, but in the long run, biofuels policy in the history of U.S. soy processing has had a limited role, and has a role that has expanded very rapidly in the last 3 to 4 years. But it could end tomorrow, and our industry would still be doing quite well servicing the needs of the global consumer.
Yeah, fantastic. And I should note as well, you publish with relative frequency your views on what's going on in the market as well. And I'm sure people can find you. I'll put links to you in the show notes. So I guess if they're interested in your continued insight in this space, they can get on the mailing list, right?
Absolutely. Glad to accommodate that. And I publish about every 2 weeks, and it is on a focal point of mine is global oilseed processing. And so if you're interested and you've enjoyed this pod, please connect with me, and I'll get you my analysis every couple of weeks.
Yeah. Well, Walter, it's been an absolute pleasure. I look forward to having you back on. Hopefully it won't go another year and a half or so, but to see where we are in these trends, because I think it just reminds us all that this sits at the epicenter of commodities in terms of food, security, energy, and is kind of a bit of a poster child for all of the transitions, whether that's technology, deglobalization, decarbonization, that is challenging and providing opportunities in the commodities sector. So I always find it really fascinating.
Great. Thank you, Paul.
Thank you for listening. To find out more about HC Group, our global offices, and our expertise in search within the commodities sector, please visit www.hcgroup.global.